U.S. court acquits NNPC of more than $2 billion debt acquisition by ESO. Bureau of Public Procurement saves federal government 26.86 billion naira on contracts. Trade war concerns affect oil prices as British Airways pilots ground planes over pay dispute. This is Business Express reaching you from Abuja, the nation's capital. I am Muplang Dakok. A U.S. Southern District Court of New York has delivered judgment in favor of the Nigerian National Petroleum Corporation (NNPC) against Exploration and Production Nigeria Limited and Shell Nigeria Exploration and Production Company Limited, known as ESO. Spokesman for the corporation, Ndu Ugamadu, disclosed this in a statement issued on Sunday in Abuja. The judgment follows a protracted litigation arising from the disputes between NNPC and ESO regarding the implementation of the production sharing contract dated May 21, 1993, covering OPL 209/OML 133 on September 4th. The U.S. court delivered its judgment by which it upheld the corporation's application to dismiss ESO's enforcement application on the ground that a competent Nigerian court had set aside the underlying award. It also directed the clerk of the court to terminate and discontinue all motions and processes filed by ESO in the matter. By this development, the NNPC has successfully secured the dismissal of ESO's application to secure recognition and enforcement of its arbitral award valued in excess of $2,699 billion plus interest. The Bureau of Public Procurement (BPP) says it saved more than 26.86 billion naira for the federal government in 2018 after revising inflated contract sums submitted by government contractors. BPP said this in its 2018 annual report, where it noted that in 2018, 86 certificates of no objection were issued by the Bureau to MDAs for contracts initially totaling 1.42 trillion naira, but later reduced to 1.39 trillion naira after the review. The report further revealed that the highest amount saved, which was 22.22 billion naira, was recorded from the Ministry of Power Works and Housing. The Bureau revealed that no savings was made from contracts under the Federal Capital Territory Administration, the Ministry of Environment, and Ministry of Budget and National Planning. Now, the National Bureau of Statistics last week revealed two quarterly reports, the GDP and the capital importation for the second quarter of 2019. In the two reports, the economy performed lower than the corresponding period last year. We'll be looking into their implications after this break. John Alabi, Professor of Management Strategy, joins us from our Kaduna studio as we take a look at the figures vis-a-vis the scenario in South Africa. You're welcome to Business Express.
Thank you. Good afternoon, Nigerians. It's a pleasure to be here once again.
Right. So the figures for the GDP and the capital importation for the second quarter of 2019 were both in the negative. What does this mean for Nigeria's economy?
Thank you very much. Well, MBS has published the statistics, and comparatively, what we're looking at is the first quarter, the second quarter, vis-a-vis what happened in the corresponding period in 2018. I want to say that there's a nexus between GDP and economic growth. And of course, for GDP to record that downturn of 1.94% year out for second quarter, which is very, very below the estimated projection. We were looking at 2.4%. And of course, if you look at the first quarter of this same 2019, it's also far below that. One thing stand out clearly, that the GDP that's dropped is mirroring, as it were, the economic strength of the nation. And I think we must also know this, that the first quarter and second quarter of 2019, average will have been 2.02. But the first quarter and second quarter of 2018 is 1.7. We may say, oh, it's a slight improvement if you look at corresponding period in 2018, 1.7, now in the 2.02. But yes, we witnessed an increase, but then the current level we have now is not too comfortable. So the implications are quite many. I think the very first one is to look at it vis-a-vis attaining the goals set in the 2019 budget. It becomes very, very difficult to achieve that projection. 2.26 we are looking at. And
Mr. Labi, at 1.94%, the GDP is still low compared to the population's growth. Is this a matter of concern?
It's also below the population growth rate. Aside that, there are some interest-dependent, interest-rate-sensitive sector of the economy. Agric, all right, very, very important. Infrastructure, manufacturing. These are sensitive to interest, so it's going to affect that too, because the non-oil export has not performed well, if you look at it, both in terms of manufacturing and what have you. So it also affects those sectors significantly. Another area is a negative implication on equities. It's very important. So we're saying on the whole, it is not a good omen for Nigeria. It's going to affect us negatively.
So you talked about the non-oil revenue. It is still very low. So what are those steps that need to be taken to buoy the figures, or to boost the figures?
Okay, yeah, you're right. Now, if we know that we are in that negative, I said interest rate sensitive sector, agric and manufacturing. To boost our non-oil export, the critical thing to do is to diversify. Diversification in word and in deed is very critical, so that we can show up our revenue. It's very important. But how do we do that? Number one is fiscal policy. In the area of taxation, I think it's important not only to widen the tax net, but also to tax luxury goods. Those who earn more in this society should pay more. It's very important. And of course, in our tax exercise, we must also widen it. It's very important. Another area is the manufacturing sector. We need to have and concretize the ease of doing business, such that our manufacturers will show up. For instance, we need to have stable power supply, which is critical for industrial growth. We need to have, those friendly finance policies that will encourage them to do more. If you can do that, that is the second one. I mean, the third one, areas we have neglected, is the mining sector. We need to be making money. Why did South African GDP witness significant growth? They leverage on agric and mining sector. So we must do that. Agric and the value chain, mining sector is very important, and other trade services we have around. If we do this, we will grow it. Above all, in doing all this, governance is critical. Anti-corruption is important. If we can do that, of course, we will reverse the trend. We need to boost our non-oil revenue so that we can, reverse this negative trend. First quarter, second quarter, not too good at all. The third and fourth quarter is also coming. So it's important that we do something because negatively now it's affecting even the capital market.
Let's talk about the recent xenophobia in South Africa. We've seen renewed provocations and tensions in that country. Two of Africa's largest economies are now in a seemingly diplomatic role. How is this affecting both economies? That's talking about Nigeria and South Africa.
Let's situate it in context. I begin to wonder if it's xenophobia or is Afrophobia. But whatever it is, because it's affecting the two largest economies in Africa, Nigeria and South Africa, it's very important. The effect is multidimensional. Of course, it's jeopardizing existing investment between the two countries. You want to say, yes, what are the investments? Yes, ShopRite, we have it here, we have MTN, we have Stanbic Bank, and we have South African Airways. Over there, what we have essentially is Dangote and some informal trade. That itself can jeopardize the business interest. The second effect will be in foreign direct investment. FDI, capital inflows, will definitely not stream in. Where we have a country or two countries that are supposed to be giants and they are loggerheads, investors will be critical and skeptical of moving in. Another thing is even profitability of those enterprises. For MTN, I was listening to the group MD this morning, for MTN to close shop for 1 or 2 days, it's something very significant. So it's important. The same thing applies for our businesses. So it's very important. The negative effect also on intra-African trade. Remember, we are going towards, African continental free trade area. If we go with this kind of position of, phobia, all right, against it ourselves, I think it will not work out well. So I'm saying essentially it will affect existing business interests. It will deter foreign investment. It will not promote healthy, bilateral trades amongst African countries, which the AfTA is seeking to achieve.
All right. We are approaching the middle of the third quarter of the year. Is there a cause for alarm considering the last quarter's figures?
Yes, sure, there is cause for alarm. But in management, what we do is to be proactive. You cannot do anything about the past rather than to use the lessons from the past to correct the future. Now, Q1, not too good. Q2, bad. Therefore, moving ahead, Q2, 3, 4, there's cause for alarm, I know that, because 2019 budget is barely not being implemented, and it's going to be impacted by what the figures we're seeing. So it's important. Also, the ARGP, the Economic Recovery Growth Plan, has a target. The target said it's way ahead of what we're achieving now. So there's need for concern. There's need for concern. But then, for proactive managers, all you need to do is to look at those figures and start leveraging areas of strength and note the area that can cause weakness. Indicators are there. Oil price, it's not moving on, but we can work at it. The issue also of the PID, debt judgment, we must pursue that. It's important. These are proactive measures. Of course, diversification, there's no two ways to it. We must concretely diversify, leverage agriculture and the value chain, look at mining. Tourism is very critical, and other services. And above all, we must fight insecurity and infrastructure. If we do this, the economy will have a leap. So that to us to achieve the benefits of what is coming, we have to do something strategic. All right? Because I'm looking at the figures, and I'm saying, therefore, that if we want to achieve the target of ARGP, and that we have set for ourselves, then we have to do more. In the third quarter, we must be doing 2.10. In the fourth quarter, we must do like 2.66, so that we can get an average of about 2.22, which is the target as envisaged in the ARGP. So essentially, there's cause for alarm, but in management, you stabilize. When you have a challenge, all you need to do is look at the table and see what you can do and do better. Nigeria is a resilient economy, and Nigeria will definitely get out of it. The global economy is in a recession, we know, but we are...
Mr. Alabi, can we have your expectations for the economy, that's from the government as well as citizens, and also the private sector, your expectations for the economy?
The year 2020 is about just 4 months away from here, 125 days to be precise. For me, all I want the government to do is essentially to look at the 2019 budget and that blueprint, ERGP. Lofty objectives, achievable objectives, but we need tenacity. The ministers are in place now. The permanent secretary and technocrats must work in tandem with them so that we can look at it. We need a teamwork in the entire cabinet such that we can deliver. Because if we can do that, of course, we'll be doing a lot of things. Economy, insecurity, infrastructure, must fight it on the part of government. And above all, for government, we must be transparent. We must fight the corruption to a standstill. If anyone in government is found to be corrupt, I think they should be given. In fact, I would appreciate government to have a signed letter of resignation for every chief executive. If you don't do well, you are out of it. That's for government. But for citizens, our expectations are very, very high. We want food on the table. We want infrastructure, road, power. We want, good governance. We want poverty reduction, youth employment. We want to revamp the education system. If you can do all this for the people, of course, we'll be okay, essentially, because the three platforms of economy is just economy, the society, infrastructure, and governance. If you can address this, of course, the country will be better for it. I know that with the support of all of us, we should drop partisanship, we should pray for our leaders, and we should also contribute in our little way. And of course, Nigeria is better for it. We need to deliver. Next level should be real and concrete terms.
Thank you very much, Professor John Alabi from our Kaduna Network Center. Thank you for sharing your thoughts with us on Business Express.
And good day, Nigerians.
Okay, moving on. The Nigerian stock market recorded its first weekly loss for the month of September. Despite opening the week on strong footing, the market failed to sustain steam. Bosede Abel has a summary of market activity.
The month was off to its first weekly loss, with the all-share index shedding 1.38%. It closed the week at 27,146.57 points, while the market capitalization stood at 13.2 trillion naira. While a number of indices finished lower, the NSE Banking, NSE Pension, NSE Insurance, NSE Applicable Federal Rate Value, NSE Applicable Federal Rate Dividend Yield, NSE Merit Value, and NSE Industrial Goods Indices appreciated by 0.2%, 0.84%, 0.38%, 1.56%, 1.41%, 1.64%, and 0.59%, while the NSE ASEM Index closed flat. 1.1 billion shares worth 17.082 billion naira were traded in 15,431 deals by investors. Activities were driven by the financial services industry, with 752.4 million shares valued at 9.9 billion naira in 8,519 deals. It was followed by the conglomerate industry with 93.2 million shares worth 239.2 million naira in 883 deals. In the third place was construction and real estate industry, with a turnover of 65.8 million shares worth 66.7 million naira in 100 deals. The top three equities, Guarantee Trust Bank, Access and Zenith Banks, jointly accounted for 530.3 million shares worth 9.096 billion naira in 3,604 deals. A total of 3,692 units of exchange-traded products, ETPs, valued at 1.9 million naira were traded in 10 deals. Also traded were 47,690 units of federal government bonds, valued at 51.008 million naira in 15 deals. 27 equities appreciated in price, 34 equities depreciated, while 105 equities remained unchanged.
Meanwhile, at the close of trade Monday, the all-share index lost 0.21% to close at 27,089.84 basis points, while market capitalization stood at 13.1 trillion naira. Volume of trade finished at 290.4 million, valued at 4.2 billion naira in 2,900 deals. Guarantee Trust Bank dominated trade with a whopping 128 million shares. It was followed by FBN Holdings and Transcorp. And global stocks show sign of recovery following indications China and the US would be returning to the negotiating table over trade. Bosede Abel again has details.
On the global scene, hope of progress between China and the U.S. offset worries surrounding the major economies. According to the Chinese Commerce Ministry, the two largest economies could return to the negotiating table next week. In the United States, the Dow and S&P 500 both gained at least 1.5% on the week, while the Nasdaq climbed 1.8%. In Asia, markets also took a positive turn as the Shanghai Composite gained 0.46% to end at about 2,999.6. The Hang Seng Index added 0.56% and Nikkei closed 0.54% higher at 21,199.57. Market participants in Europe continue to monitor political uncertainty in Britain, with 55 days scheduled to leave the European Union. While in Africa, stocks were mostly mixed as concerns over xenophobic attacks in South Africa rise.
Thank you, Bosede. Cost of palm oil rises in local markets as palm fruit season approaches. British Airways began a two-day strike on Monday, grounding nearly all of its flights and disrupting thousands of passengers in a dispute over pay. The airline, part of the international airline group, cancelled 1,700 flights to and from London's Heathrow and Gatwick airports on Monday and Tuesday ahead of action by British Airline Pilots Association members in first ever pilot strike. IAG shares were down more than 2% in early trading. British Airways has offered its pilots an 11.5% pay rise over 3 years, which it said would take the pay of its highest earning captains from £167,000 plus £16,000 in allowances to just over £200,000. Now let's see how the Naira is performing against major currencies. And reports just reaching us say President Muhammadu Buhari has directed immediate voluntary evacuation of Nigerians from South Africa over xenophobia. And that is how we wrap up this edition of Business Express. All previous episodes are available on YouTube and on NTA channels. You can also communicate with us on Twitter, and the handle is at NTA News Now. The hashtag is BizX. Business Express returns Wednesday. I am Muplang docx.